Today I'm going to show you one very key important new bit of information which is printed on the Bitcoin chart and why this is very, very important for what is coming next. And it's none other than this candle over here. We do have a massive shooting star candle which has printed on the daily. It is an ugly looking close. Stay tuned because in a few minutes time I am going to show you exactly what that means. But first and foremost, as usual, let's zoom out quickly and have a look at the high time frame at the weekly chart over here. The current Bitcoin price is $23,889 at current time right now. And look, it's not all doom and gloom. I will show you the potential upsides that are still in play. But with that being said, you can see that we have a massive wick which has been left behind. And as long as Bitcoin manages to bounce off of this weekly range high, which is coming in at about $23,600, and it can use that as a springboard to jump off leading into next week, then I think the upsides are still potentially in play. But I'll give you the exact pivot levels that you need to be focused on and you need to watch carefully leading into the weekly close and the daily close, because if we start to lose certain levels, then basically the bullish case could get taken off the table rather quickly. So with that being said, should Bitcoin on a weekly time frame manage to close this as a green candle, look, firstly, you want the wick over here to be smaller than the body. In other words, you want the bulls to take charge, push this up a little bit higher, and if it closes with just a small wick, then that could be okay leading into next week. And the target still remains up at $27,000 to the upside. That is one area of interest. Okay. Looking at this chart over here, so we were viewing this as a potential ascending triangle with a measured move breakout to $28,000. And of course, that depends on when that happens. I did show you all yesterday the incredible confluence that you have coming in around this $28,000 area with the 0.618, that golden ratio, the fib retracement level at 28,737. But if you have a look at this, we have a shooting star on the daily, which I just pointed out to you. And you can expect some sort of a pullback from that level. Now, the question is, where will that pull back towards? And should you be a buyer at that level? Well, on the low time frame, I'm going to identify the exact zones for you. So make sure you stay tuned. But looking at the previous reaction off of those shooting star candles, you had this one over here, which led to some downside. So it's identified almost every single local top in the last couple of months. You had this one over here, which also led to further downside. You had this one over here, led to a downside move, confirming a local top. And the only one that didn't work out was this one that happened on the 21st of June. So with that being said, again, not all doom and gloom. There could be just a slight pullback, and as long as I would say the $23,000 level gets defended, that would be your area of interest to buy the next higher low, and the trend is your friend until the end of the trend. So in the short term, I remain very, very cautiously bullish, expecting that there should be a bounce off of $23,000. But if that level gets lost, there could be much, much further downside. But it's going to come down to a whole lot of different factors. And I'm going to show you something very interesting on the stock markets and what I'm looking at, because my whole narrative is really being driven by the stock market. The stock market essentially dictates what is going to happen to crypto. And I think that the stock market may be setting up for a massive bull trap. But because the stocks move differently to crypto, it could take a couple of days, potentially even a few weeks for that to play out before the hammer comes out and the bull trap gets confirmed. So with that being said, let's have a look at this tweet over here, which is top trader Pentoshi. And here he says that the upside for SPX, I believe, is around the 4,100-ish level for now. Then markets likely find new lows in due time. As with all things, patience is required. This year should have taught you. I have explained my position on this several times in the last month. He's a macro bear, but a short-term bull, and he's outlined his levels over here. And I'm going to show you my zones that I'm looking at. There are some similarities to what he is seeing here, and he's looking at, remember, everything is around what the Fed is doing and their pivots within the raising of interest rates, and they are attempting to get a soft landing. So he's having a look at this zone down here at 3,400 on the S&P 500 as a potential soft landing / a little bit of pain territory over there. So with that being said, let's go straight to the S&P 500 and exactly what I am personally looking at. Well, this is what I'm seeing, right? So we had the orange area over here was kind of a horizontal piece of resistance over here. You can see the same thing. You have a shooting star candle. I am on the daily at the moment. I've mostly shown this to you on a high time frame. So you have your shooting star candle over here. So what could happen now is there could be a slight pullback. That area could be defended by bulls, where price may bounce off of that. What a lot of people will be looking at then is they'll see this as a deviation with a confirmed shooting star candle, which is going to show that there is an indication of more downside coming. But with that being said, look, I think that what's going to happen is that they may aim for the stops that are on this side over here. So what institutions kind of control the market. And I think that they may push price as high as this, because if you get some sort of a pullback, price pushes back up and you reclaim this level over here. That is essentially where most bears have to throw in the towel and pretty much give up their bearish case and say, well, look, price managed to get above here. And now what we're looking at is a potential V-shaped recovery, risk back on for everybody, and that is right where the trap would get set. So the zone that you need to be cognizant of and cautious of where the trap could be set is anywhere between these candle wicks over here. So anywhere between about 4,250 on the S&P 500 and potentially all the way up to about 4,400. So I think that the last stops could be taken out. You may see wicks that come up like that, and that would be a mega bull trap that could be sent to the downside. So what I'm essentially saying is for the stock market as a percentage, there could be a push up another 4 or so percent, which for crypto might translate to anywhere between, depending on if you're looking at Bitcoin or altcoins, but I would imagine in the region of about 10, 15, maybe even a 20% move to the upside, and keep that number in mind. 20% to the upside. We'll see where that takes us from current price action on the Bitcoin chart. So also marked out a vertical line over here for our next important meeting, and there is going to be a whole bunch of them, which I'm going to cover shortly, but it is September the 20th. Now, that is going to be your next FOMC meeting, and I think that price action could meet the next major top around that date, somewhere around that date. And then I expect the last week of September, and I've stood strong on this for quite some time. Mark my words, I think the last week of September is where you see absolute mayhem in the market. If there is going to be a bull trap, I think it unfolds in that last week of September. So mark that as an important date on your calendar. Okay, let's quickly just switch us to traditional markets. I want to have a look at the NASDAQ. NASDAQ is going to be similar, right? So NASDAQ's currently attempting to break above that diagonal, and I would expect something similar, push up further in relation to what I just showed you on the S&P 500. You're going to be targeting this zone on the right-hand side, which is these wicks over here coming in at 347. That's basically where most people would have to give up their bearish case. And if you look here at JJ Cycles, I'm going to retweet this because it is quite long. It's a thread. So feel free to have a look in the description. You'll find a link to my Twitter. Go to the Twitter over there. You'll see what I'm having a look at. It says, if we want to see a pause or pivot on Jackson Hole the 25th of August, we want to see the US economy show signs of deterioration in data that comes in until then. And this is essentially all the important things that are currently listed on the Forex calendar, which is showing all the important events that are coming up over the course of the next month or two. I think that you should mark these days out, because all these days is when when you usually see some sort of volatility. Now, I'm not necessarily saying that you need to go short on the market right now. I'm just going to outline 2 zones where you could potentially buy the dip. And then on top of that, where you should be taking a risk-off approach within the crypto markets, because this is likely going to go a little bit higher for the bulls. Now, very, very quickly, just shout out for our sponsor of the day is GALA Games. I have mentioned before, they are doing a massive film launch. And if you do want to participate in purchasing a node, then just click the link in the description below. You'll be taken to the site, and give me 21 seconds for the short video and we'll get straight back into it. All right, straight back into the charts. We have Bitcoin over here on the daily chart with the 34 EMA, which has been very important. As I've outlined to most of you, somebody said there, yes, bearish divergence. There is bearish divergence on the high time frames. On almost every chart there, they say long time frames, most important indicator in Nigel's opinion. And I agree with that. I do see that there is bearish divergence, but the question is, how far will this go before it plays out? Like, could these bear flags confirm to the downside now? They could, but I do think that things will get pushed a little bit further. And again, sticking close to this chart and watching it carefully, I don't want to see the RSI break that trend line down. If it does, it has the potential to lose the main trend over here. So with that being said, what is the main trend? You don't want to see this, you don't want to see the shooting star candle go down further than 4 or 5 days, because if it does, you risk taking out the previous higher low, which is coming in at this zone over here. And when I say this zone over here, I'll put in an exact price label for you. Let's grab that. So bulls will have to see this zone defended over here, which is coming in at $22,305. Any price point underneath that, and essentially they will be in big trouble. But I would probably already start to cut any long positions on a break of this trend line over here, which is 23.3. 23,300 is pretty much my my line in the sand for closing positions. I'd rather go neutral over here. So if you start to see this zone break down, let's give it a little bit of leeway. Let's go down to about 23.3, because there is confluence with that 34 EMA as well. That should be your line in the sand, in my opinion. I'm just moving that a little bit up so you can see clearly. If you do want to take a screenshot, then feel free to do so. So this is also your buy the dip zone. This is your buy the dip zone around 23,000. Any daily closes that happen under $23,000 would confirm that you've broken this main trend down, which we came close to doing 2 days ago. But you can see we wicked off of that. So that was quite a scary time. And consequently, we currently sort of facing the same situation. So the bulls need to take charge of this very, very quickly. And they need to run this to the upside in the next couple of days, probably even over this weekend, if they want to continue their bullish momentum. Otherwise, bears are going to take full control, and this could get sent down quite hard, that is. So looking at this chart over here, I just want to have a look at the EMAs and the momentum oscillators. My main edge is on the 4-hour chart. You're again going to see that confluence coming in with the blue 200 EMA, which is sitting right now. It's rising. It's at 22,900. So again, just round that up. 23,000 is your main point of control. 23,000 to 23.5 on a 4-hour chart. Your higher low needs to be defended at 22.8. So again, for the sake of safety, just round it up. Easy number to remember. 23,000 is the number that you need to be focusing on. I'll put in a price label in case someone wants to put a screenshot. That's your 4-hour higher low that needs to be defended, and it should be okay. Momentum oscillators are coming down, but if it manages to reset and near the bottom while price gets to that level, I am going to be a buyer. I'm definitely buying this zone. I'm buying 23,000. I can tell you that right now. I'm setting up my orders, and with a close stop loss underneath, I'll probably set my stop a little bit, give it a little bit of leeway. Any wick that comes underneath 22.6. So I'll put my stop at about 22,500. And I think that's a safe zone to be looking at. Okay, going on to a more zoomed in chart over here. This is pretty much the main chart that I'm working off at the moment. I am on a 4-hour, and I am going to zoom it in onto a 1-hour. Let's take a closer look. So yesterday I did outline this yellow horizontal box over here to say that, look, at the very least, I do think that price is going to come back down into this zone over here. I did think that maybe bulls would take this a little bit further. I was thinking yesterday we're going to hit 25 to 25.5 and then start the pullback, but it looks like that has already commenced. Now you have a main range that's kind of formed over here, and I'm going to give you that exact range to use on your lower time frame chart. So let's zoom in. Okay, your main range is the yellow over here, the yellow dash line. Range high is coming in. You can write that down. Let's help you out. I'll put a price label in for you. So range high, you can put it in at about 24,230, and your range low is coming in over here at 23,000. Once again, we have this 23,000 number. Do you see that? So I'm expecting this as a deviation. So you have two deviations, deviation on the low, bounced off of the main diagonal, price got sent up, went through the range high, deviation back down, send it straight back down to the range low, and then hopefully with confluence on this dash line, the diagonal that's holding as a it's not a main trend line, but call it a secondary trend line. We want to see price bounce off of that zone. So layering in the bids between 23,500 and 23,000 as your buy zone. And I have already identified for you where you need to bail out of that position if that plan starts to fail and then you're starting to look at lower prices. So what happens if that plan does fail? If you do go lower, well, then I would pretty much just extend this over here, and I would have this as my next area of interest. I would at least like to see price catch this zone over here. I'm not going to be doing any sort of a weekend live stream, but this would be the next zone. I'll put in a price label for you. So you lose the dash line, 23,000 fails. Your next zone where you can expect some sort of a bounce is going to be around here at about 21.4. Lose that level, and then you're looking at 20,700, but the whole picture will begin to change at that point. I think it's going to be very dependent on what the stock market does today on open. So pay close attention to what the stock market is doing today. I don't think that there's too much else to update you on. Very small changes that have happened. Just looks like the stock market is starting to deviate. But in summary, I do think that institutions will try and push that higher to capture as much liquidity as possible. You need to remember that in markets, it's all a game of liquidity, right? Big players, if they're looking to sell into something, they need enough buying power. So what they do is they create a situation where they kind of stagger bids and they push price a little bit higher. And that creates a FOMO scenario where pretty much, let's be honest, we retail. I'm retail, you retail. We're the ones that usually look at those levels, and they target our stops. They hunt our stops. They sell into that. We get stopped out, sends price back down, and so the game continues. So that is what you need to watch. Please do me a massive favor. Give this video a like if you enjoy the short form content. Also subscribe, hit the bell notification so that you can be notified of the next time that we do go live. And then last but not least, very important, next week we are beginning with our trading competition. If you do wish to join, the link is in the description. Just click that over there. I think the competition's going on for a couple of weeks. RAND will be funding accounts with $250 because that is all that you require. You only need $250 in order to join the competition. And if you don't yet have a BYBIT link, then there is a referral over here. So if you don't have one, it does support me and you lose absolutely nothing. And then for those of you who are US citizens and you don't wish to use a VPN, BitGet can be used without a VPN. It gives you leverage trading options for US citizens. And guys, I think that pretty much brings us to the end of the stream. That is it from me. Make sure you follow me on Twitter at Kyledoops. Make sure you have the right one. Until next time, I'll see you all on the following video. I appreciate each and every single one of you. Have a fantastic weekend and cheers for now.